Hello, everyone, and welcome to today's Dynamics 365 Tech Talk. Today's topic is Cost Accounting Part 2, Overhead Calculation. My name is Tim, and I will be your moderator today. We are broadcasting this session through Teams live events, and the audio can be heard through your device speakers. This session is being recorded on behalf of the Microsoft Corporation. When you join this event, your name, email address, and/or phone number may be viewable by other session participants in the attendee list. By joining, you are agreeing to this experience. The recording will be available on the Tech Talks Community Dynamics page within the coming weeks. If you have questions for our presenters or need support, please use the Q&A panel located on the right side of your screen. Our presenters will be responding to your questions at the end of the session. Thank you for your patience during these announcements. Presenting for us today from Microsoft, we have Senior Fast Track Solution Architects, Alejandra Cabrales and Amar Kumar. Alejandra, over to you to get us started.
Thank you, Tim. Good morning, good afternoon, good evening, wherever you're joining us from. Thank you for joining us today to the second part of the Cost Accounting Tech Talk series. My name is Alejandra Cabrales. I'm a Senior Fast Track Solution Architect for Dynamics 365 here at Microsoft. I have added my contact information and feel free to reach out if you have any questions. I will hand it over to Amar to introduce himself.
Thanks, Alejandra. Hi, everyone. My name is Amar. I'm a Senior Fast Track Solution Architect for Dynamics 365 at Microsoft. Do reach out using the contact details shared. Back to you, Alejandra.
Thanks, Amar. In today's session, we will cover the overhead calculation in cost accounting and how to enable the right tools to do cost analysis. In an earlier session, we have discussed the overview of the module and have covered the important configurations and setups. The agenda for this session is as follows. First, we will recap what we have already covered in the first Tech Talk. Next, we will explain the overhead calculation in cost accounting. After that, we will discuss about allocation basis. Then we will move on to the cost accounting policies. We will validate the output in cost control workspace. We will wrap up the presentation with a summary of recommendations and a list of resources for further learning, followed by a Q&A session. With that, let's do a quick recap of what we have already covered in the first Tech Talk, which is the cost accounting overview. In the first session, we have gone through the setup and configuration of cost accounting module and discussed crucial configurations, such as how we build cost accounting by setting up the cost accounting dimensions like cost elements, cost objects, and statistical dimensions, plus the dimension hierarchies. We talk about the cost accounting ledger configuration and how can we bring data into the ledger. In today's session, we will go through this again, but using statistical measures into the cost accounting ledger. We review the cost control workspace, which is where we can validate the output of cost accounting and review the output in line with the cost control dimension. In past examples, we use the cost center as the main cost control dimension. Now let's get into the details of today's topic, which is overhead calculation. First, let's explain what are the overhead costs. The overhead cost refers to costs that are not directly traceable to a specific cost center product, service, or department, but are necessary to support the overall production or operation. Overhead costs provide critical support for the business operations activities. Some examples are the rent, electricity, administrative expenses, transportation and shipment, printing services, etc. All these could be used across different cost centers in the organization as they do not get assigned to a particular one. The purpose of overhead calculation is to assign overhead costs to relevant cost objects. The assignment will be based on allocation basis, and will be achieved through the cost policies defined in this module. Overhead calculation runs the cost accounting policies in this order. First, the cost behavior policy. The rules defined under this policy sets the behavior of cost into fixed and variable cost. Next, the cost distribution policy, which processes the distribution of cost as per the allocation basis. Next, overhead rate policy uses predefined overhead rates to assign a cost to a relevant cost object. Finally, the cost allocation policy. It facilitates the transfer of balanced cost from a cost object to other cost objects. These policies run in the context of cost accounting ledger and facilitates overhead calculation. Policies and rules are applied to each journal line, and cost entries are generated as an output. Therefore, you always have full traceability. To illustrate the overhead calculation, we will cover the following scenario in today's session. Freight and shipment expenses is set up as one of the main accounts in the chart of accounts, which gets translated as a cost element in cost accounting. The freight and shipment services builds the organization, and based on the overhead cost calculation, we would be allocating the cost to the relevant cost centers, which are the consumers of these freight and shipment services. We will apply first the cost behavior policy, which will distribute the cost into fixed and variable. As part of this classification, 20% of the cost will be classified as fixed and the rest will be variable. Then we will apply the distribution policy, which will distribute the cost within the different cost centers that are consuming freight and shipment services. This distribution will be based on the allocation basis derived from the number of shipments made by these cost centers. The fixed cost will be evenly distributed across all the cost centers using shipment services. And the variable costs will be distributed based on the number of shipments of each cost center. Following the overhead calculation, we will apply the next policy, which is cost allocation policy. As a result of cost allocation policy, we will be transferring the cost from one of the cost objects to other cost objects. In this case, the policy will be applied only to cost object 12, which is logistics, and only the variable component of logistics cost center will be allocated against sales and CFO cost centers in different percentage, as per the defined allocation base. As part of today's session, we will also cover the impact of cost rollup policy, which works alongside cost allocation policy. This policy is instrumental in tracking the cost flow between cost centers. So with this scenario in mind, let's proceed with today's session, and we will see the results in the cost control workspace for our cost analysis. I will hand it over to Amar to begin explaining the allocation basis.
Thanks, Alejandra. Now let us talk about allocation basis and how it is being used in cost accounting module. So what is the purpose of an allocation base? So an allocation base is a basis on which cost accounting distributes or allocates overhead cost. The overhead cost cannot be directly attributed to any specific cost center objects. So we use the allocation basis to assign overhead cost to relevant cost object. Allocation bases are of three types. They are predefined dimension member allocation base. Then we have formula allocation base, and then we have hierarchy allocation base. So where do we use these allocation bases? Allocation bases are used while defining cost accounting policy, and more specifically into cost distribution policy, overhead rate policy, and cost allocation policy. Cost behavior policy doesn't need an allocation base. Let's see the details of these allocation bases, starting with predefined allocation base. Predefined allocation bases are created automatically when we import financial data into the cost accounting ledger. Predefined allocation bases are of two types. First is the allocation base based on cost element dimension members. These gets defined for a period when the cost entries are getting created through data import from chart of accounts into cost accounting ledger. So all the main account that we have in the chart of account becomes cost element, and these cost element using the posted data across different cost centers could be used as allocation basis while defining cost accounting policy. The second type of predefined allocation bases are statistical dimension allocation base. And these are created when statistical data is processed into the cost accounting ledger for a period. And the predefined allocation basis can be used to again define further allocation basis. Now talking about predefined allocation basis from statistical dimension member, it can either be defined using imported data, or we can also use finance and operation data to create these allocation bases. For example, if we want to use production hours or production quantity, then we can use finance and operation data to generate these allocation base. And if we want to use finance and operation data, then we have also captured documentation which talks about how we can use provider templates to bring data from finance and operation as an allocation base into cost accounting ledger. Moving on, the next allocation base that we're going to talk about is formula allocation base. Formula allocation base provides a flexible approach of defining new allocation based on different formula. It uses different operators to establish the formula. So if you'll see the operators, all of these operators which are addition, subtraction, less than, smaller than, they can be used to define the formula. And now if we'll talk about the formula, here we see X is a shipment and Y is a constant that we have defined. And the formula that we have defined for this one is X greater than Y. So any cost center which is using more than 0.1 shipment, then the formula will return true, and that would eventually translate into a value of 1. So for all of these cost center that we have on the screen, 12, 10, 14, and 17, this formula returns to be true, and that will give a magnitude of 1 for all of these cost centers. So any cost that is going to get allocated on this formula allocation base, that would be evenly distributed across these cost centers. And we'll be talking about this particular example when we define allocation based output and also the policy for equal distribution of shipment cost. Now talking about the next formula allocation base, that is hierarchy allocation base. And hierarchy allocation base also provides a way to create multiple allocation bases leveraging predefined allocation base. So one predefined allocation base can be used to create multiple hierarchy allocation base, and let's quickly see how we can do that. So in this one, the base allocation base is full-time employee, and this organization is 100 full-time employee, and they have been distributed across cost centers, which are human resource, admin, production, service, software, and hardware. And the numbers in bracket talks about how many employees work in HR, how many employees work in human resource. So now if you'll see the definition of hierarchy allocation base, it starts with full-time employee, and then we are referencing organization cost object dimension hierarchy, and we are slicing that with CFO. So if we are using full-time employee in CFO, then any cost which is going to get allocated based on that would be divided across human resource and admin in a ratio of 30 and 20. And same about CIO, it would be divided in the ratio of 10 and 10, which is equal distribution between software and hardware. So that is how we can leverage hierarchy allocation base to define multiple other allocation base to fit the business requirement. So with that, now let us look the configuration of cost accounting ledger and how we are bringing the data from a statistical measure into the cost accounting ledger. We'll also talk about allocation basis with the data that we have already imported as part of cost accounting ledger. So for this session, we have also created some data into the financial accounting system and also imported some statistical data in order to create a different allocation base. So let's quickly overview the data that we have prepared for this session. So this is a journal voucher that we have posted for the period March 2022. And this data has been posted to legal entity USCA, and that is where we are going to configure the cost accounting ledger. So let's quickly look at our shipment and freight and transportation cost that we want to run the overhead calculation has already been created as part of this journal voucher, right? And this cost has been posted to a default cost center 099. So we have posted 50,000 freight and transportation cost to default cost center 099. So we'll be using this data. And in addition to this, we have also posted and created a statistical measure. So in this case, we have created measures for shipment and logistics allocation base. Shipment represents number of shipment being done by different cost centers, which is 300, 200, 400, and 600 for all of these cost centers. And logistics allocation base talks about a ratio of logistics between two cost centers, which is 40% and 60%. So department 10 would get an allocation of 40% and department 9 would get an allocation of 60% when we'll talk about imported statistical measure. Finally, we have also created a statistical dimension in line with data that we have imported, and we'll use this data and this dimension while we are defining the cost accounting ledger. So with this data preparation overview complete, let's quickly look into the cost accounting ledger configuration that we have done. So this is the ledger that we have defined for this session. So this ledger is a new ledger that we have created, which is USCA overhead calculation. And in this ledger, we have defined cost element, we have defined fiscal period, we have defined the currency, we have defined the exchange rate, and we are also linked the statistical element that we are going to use for this ledger. And after that, we have also defined the definition of cost control. The cost control that we are going to use for this ledger is cost center, and that is what we have defined in, again, this ledger. After that, in the cost accounting ledger, we also will have to define where the data is going to come from, and that definition is going to come from data source definition. So let's first look at the data source for general ledger. So in case of general ledger, the data is coming from finance and operation, and the cost element dimension that we are using is cost element. And if we look into the data provider definition, then data is going to come from USCA legal entity, and the posting layer that we are using for this session is going to be current posting layer. So with this definition, the GL data source have been configured. The next data source that we're talking about is a statistical measure data source. In this case, let's talk about logistics allocation base and shipment. These are the two imported statistical measures that we have created. This data is going to come from imported data that we have already seen for shipment and logistics allocation base. And for logistics allocation base, the link dimension member is logistics AB. And now finally talking about the data provider that we have used for this one is we have used the import source identifier in this case as logistics allocation base, and the function that we have used is sum. It provides two functions, sum and count, but for statistical measure we are going to use sum function, and we are linking this measure with cost center cost object. Similarly, for shipment, the configuration is same. In case of shipment, the source identifier would be shipment. So with that, our data source have been configured in the cost accounting ledger. The next step would be to bring the data into the cost accounting ledger. For that, we'll have to process the definition of this data. So let's see the source data configuration for this cost accounting ledger. So the very first thing, we'll have to go back to cost accounting ledger, and then we'll have to go back to actual data processing, and in that we have source data processing. So if we click on the source data processing, we will be able to see that under process data source, we have two buttons, one for GL data entry and one for statistical data and measure entry. So let's define the data processing for general ledger. So if we click on that, it will give the period definition. We'll have to select from which period we are going to bring the data from. So in this case, we are bringing data from period 3, 2022. So once this data processing is complete, all the financial data that we have posted in the general ledger module would be created as a cost entry in the cost accounting ledger. Similar to that, the process of a statistical measure is also same. In this case, also we have to define which period we have to bring the data, and once the processing is complete, the data about shipment and data about logistics allocation base would be brought in as part of cost accounting ledger. So with this information complete, the configuration of cost accounting ledger is done. Now we can quickly look into the process data that we have brought in as part of cost accounting ledger. We'll start with financial data that we have brought in the cost accounting ledger. So if as part of source data processing, we have one entry for period 3 into general ledger entry transfer journal, and this data is coming from data source USCA that we have defined for this cost accounting ledger. And if we'll see the details of the data that is being ingested in as part of cost accounting ledger, then we can see all the data that we have posted as part of GL voucher have been imported, and we also have our overhead calculation of freight and transportation that has been brought in into cost accounting ledger. And right now, if you'll see the data that we have brought in for freight and transportation have been marked against the default cost center. So with data for financial data already been brought in and ingested into cost accounting ledger, now let us also quickly review the and processed statistical measure entry into cost accounting ledger. In this case, now we can see there are two entry. There are two entry because we have definition defined for shipment as well as logistics allocation base. So as many data sources you will define, that many entry it will bring if the data is their side. So in this case, shipment and logistics allocation base have been imported for period 3. And looking into the data for shipment, we can validate that all the shipment that we have imported imported statistical measure have been brought in into the cost accounting ledger for the period 3, right? So now we can see the magnitude. The magnitude here refers to number of shipment being done by these cost centers. And similarly, going forward, if we'll talk about logistics allocation base, then we'll see in this case also we have brought in the data for period 3. And if we validate the data for period 3, then we can see for logistics allocation base, the magnitude here refers to the percentages. So in the case of cost center 9, the percentage is 60, and in the case of cost center 10, the percentage is 40. And in that percentage only we'll be going to allocate logistics variable cost when we'll do the cost overhead calculation. So now data being ingested into cost accounting ledger, we can look into the output of allocation base. So all the data, whether it's a financial data or data for a statistical measure, they can be used to create allocation base output once the data has been ingested as part of cost accounting ledger. So let's quickly see the demo of allocation base output and how we can use these allocation bases further in the cost accounting policy. So we'll start with allocation base output now. Let's quickly get into the demo. So now, if we'll navigate to first to predefined dimension member allocation base, so we have shipment data that has been ingested as part of our ledger. So using the preview, we can see what is the allocation base. So here we are selecting the cost accounting ledger and we are selecting the source version. And now we are also selecting which period we want to see the allocation base. So we'll select the period 3. And once we select the period 3, we would be able to see by clicking on OK that for period 3, this is how the allocation base looks like. Now we can quickly see the allocation base gives the definition that we have already imported, and the shipment that's been done across is being reflected as a magnitude. Similarly, if we'll go back to logistics allocation base, we can again use the preview button. Preview button is applicable across all the allocation base, and by defining and selecting the right ledger and the period, we can see how the allocation base is coming out to be. So in this case of logistics, we know that allocation base will give us the data as 60 and 40 because that is the percentage that we have given between two different cost centers. So cost center 10 has 40% and cost center 9 has 60%. And now let's also go back to formula allocation base because that is the third allocation base that we are going to use in our session today. So let's quickly look into evenly based on shipment. The definition of this we have already covered. Now let's quickly see the preview again by selecting the cost accounting ledger and the period that we have. So once we do that, we would be able to see for period 3, the magnitude is coming out to be 1. It is coming out to be 1 because all the shipment is always greater than 0.1 for all of these cost center, and that results into magnitude of 1. So whenever we'll use this cost center, this allocation base, we would be able to divide the cost equally between these 4 cost centers. Now, the understanding of allocation base and cost accounting ledger being already set up, and we can move on to the definition of cost accounting policy. And for that, I'll hand it over to Alejandra. Alejandra, over to you.
Thanks, Amar. Now let's go through cost accounting policies and how they are being used in the context of the scenario that we just discussed. First, we will introduce the cost behavior policy. This policy is more related to the classification of costs into fixed and variable, and it does not need allocation base. When the cost entries are created into the cost accounting ledger, cost is defaulted as unclassified. Then, the cost behavior policy orchestrates the classification of cost into fixed and variable as per the rules defined. Different dimension hierarchies can be used while defining the cost accounting policies. And for cost behavior policy, we have used these dimension hierarchies. For cost object dimension hierarchy, we have used organization. And for cost element hierarchy, the cost behavior has been used. In here, for example, the variable node refers to all the cost elements between the range highlighted. Now let's see how we configure cost behavior policy using these hierarchies. In this example, we have created the rules for cost behavior policy. Anything that comes through the fixed node will get 100% fixed and nothing will be variable. And anything which is coming from variable node will be having 0% as fixed, which translates to 100% variable. But we are adding an exception for shipments, where we are saying that only 20% of the cost will become a fixed cost. So once the policy rule has been defined, we must go and activate the policy using policy assignment for cost control units. In this module, all the policies which need to be used must be activated using policy assignment for cost control unit. Now let's check out the next policy to be applied. After cost behavior policy, now we will apply the cost distribution policy, which is used to distribute costs that have been financially accounted on a collective cost center. In our scenario, the freight and shipment expenses have been posted against the default cost center or collective cost center, and that they will be allocated. We want to distribute freight and shipments expenses based on different allocation bases. Fixed and variable costs will be distributed using defined allocation base. The shipment fixed cost is to be distributed equally using evenly based on shipments, which is a formula allocation base. and the shipment variable cost is to be distributed using shipments, which is a predefined allocation base. For configuring the cost distribution policy, the hierarchy used for cost object is organization, and for cost element hierarchy, we're using CDSPL. And in this hierarchy, the shipment cost element is part of shipping, freight, and packaging node. Now let's see how we configure cost distribution policy using these hierarchies. So here is how we are defining the rules in cost distribution policy. Whatever is fixed cost in shipping, freight, and packaging will be distributed evenly based on shipments. Whatever is variable cost in shipping, freight, and packaging will be assigned based on the number of shipments for each cost center. Our next policy is cost allocation policy, which is just to allocate the balance of a cost object to other cost objects by applying an allocation base. In this scenario, the balance cost is available on logistics cost center. If that is having variable cost behavior, will be allocated to cost centers belonging to sales and CFO based on an allocation base. On the cost allocation once the cost allocation is performed, the cost gets allocated to the destination cost objects from the source cost objects. It is not possible to track the flow of cost between cost objects by only using the output of cost allocation policy in cost control workspace. So to track the cost flow, we need to define secondary cost elements and cost rollup policy rules. We need to create secondary cost elements for each cost objects. Let's see the secondary cost element definition and dimensions hierarchy with secondary cost elements incorporated. We will use them in the definition of cost allocation and cost rollup policy. For all the cost centers, we have added a secondary cost element. We have also defined secondary cost allocations in CDSPL dimensions hierarchy and added the definition of secondary cost elements in the cost element hierarchy. We will validate the outcome of overhead calculation with respect to the secondary cost element in cost control workspace. But before that, we will examine the details of dimension hierarchy that has been used in the definition of cost rollup policy. For cost rollup policy, we have these two dimensions hierarchies. Cost rollup CC, dimension hierarchy for all cost centers. This hierarchy has all cost centers configured under one node by defining the range highlighted. And we're using cost rollup CE dimension hierarchy for cost elements. This hierarchy has all cost elements configured under one node by defining the range highlighted. With the details on relevant data needed for policy definition, now let's understand the details of cost allocation policy. Cost allocation policy allocates the balance of cost of a cost object hierarchy node as per the allocation base. One important difference between cost allocation and cost distribution policy is that the cost distribution cost gets allocated only to primary cost elements, and in cost allocation, cost can also get allocated to secondary cost elements in the rollup when the rollup policy is defined. Also, in the policy definition for cost allocation policy, there is no way to add cost elements nodes. Here, all the variable cost for cost center 12 will get allocated as per logistic allocation base. The cost allocation between cost center is not easy to track after overhead calculation, and that is where cost rollup is being defined to track the cost flow between the cost objects. So now let's understand the definition of the cost rollup policy. So how cost flows between the cost objects? The definition of cost rollup policy can help to address this question. While defining the cost rollup policy, a secondary cost element has been created for all cost centers. Additional dimension hierarchies for cost objects and cost elements specifically for cost rollup policy has been created. The cost rollup policy rules work with the output of cost allocation policy. So with the policy rules defined for cost rollup, the cost being allocated as part of cost object will be rolled up to secondary cost elements. Now let's run the overhead calculation to generate cost allocations as per the policies defined. We will run overhead calculation twice. Once with the cost rollout enabled and once without the cost rollout with the cost rollout disabled, and validate the outcome in the cost control workspace. For that, let me hand it over to Amar for him to show us the next demo and the subsequent actions.
Thanks, Alejandra. Now let us see the processing of overhead calculation in the next demo. Overhead calculation will consider the policy that we have defined till now and allocate the shipment overhead cost based on the policy rules defined. We will be running the overhead calculation twice with the same setup. In the first run, we'll not use rollup policy, and in the second run, we'll use the rollup policy, and with that, we'll validate the difference in the result generated. And same will also review as part of cost control workspace. With that, let's quickly look into the demo. So the cost overhead calculation is to be done against the cost accounting ledger. So let's navigate to the cost accounting ledger, and we are doing only for actual data. So we'll select the ledger, go to the actual versions, and in the period calculation, we'll go and run the overhead calculation. We'll select the period, which is going to be period 3rd, 2022, and run the process. Once the process is being running, it will evaluate all the policy, and based on that, it will generate the output for the policies. So the 3 policies that we have defined are cost behavior, distribution, and allocation. Let's quickly look into the entries for cost behavior. And if we'll go and select the shipment and freight and transportation cost, then going to the cost entry, we can see that for freight and transportation, $50,000 have been classified into fixed and variable, and 10,000 has gone to fixed and 40,000 has gone to variable. And that is the rule that we have defined. We had 20% to be going as a fixed, and the cost behavior policy has given the result that we expected. Now, with that, now let's go to the next policy in the order. That would be cost distribution policy, and let's see the journal for that. In the case of cost distribution policy, the cost for fixed cost for freight was to be divided equally between the cost center which were using shipment. So if you'll see, that is what happened. $10,000 have been divided equally between all the 4 cost centers, and variable cost was to be divided in the ratio of shipment being made by those cost centers. So for all the 4 cost centers that we are discussing, this is the, and we can also trace the rule directly from the journal that we have. So now we know this has been used through distribution. So right now, if you'll see across all the 4 cost centers, the cost has been defined. Now the cost distribution being covered. Now let's quickly go into the cost allocation. In the case of cost allocation, we wanted to allocate logistics variable cost. So let's quickly go to the logistics variable cost, and 8,000 is a variable cost that we have, and it was needed to be divided into 40% and 60% between 10 and 9, and that's what has happened. And if we'll trace the rule, then we can see that the rule is going back to the cost allocation policy that we have defined for that. So that is how the cost. So that is how the cost allocation overhead calculation works. So now with that, we have covered overhead calculation without rollup. Now we'll quickly go on and enable the rollup policy, and we'll see how and what kind of differences that we can see in the cost allocation journal. The cost behavior and distribution will not modify because we have talked about only rollup policy impacts the behavior of cost allocation journal. With that, let's resume the demo. We have gone to the cost rollup policy, and now we are enabling the cost rollup policy for our cost accounting ledger. So let's quickly define from where and which sheet we are going to enable that, and we'll go and select the cost control unit, which is coming from USCA overhead calculation ledger. So once we define that, we can go back again to the cost accounting ledger and run the overhead calculation by going back to actual versions. So if we run the overhead calculation for period 3, we'll select the period 3. In this case, we know only overhead calculation will impact the allocation journal. So we'll investigate result of only the allocation journal in the last run. So let's go to period calculation, go to last calculation journal run. And in this case, if we'll go back to cost allocation journal and go back to the journal entry, then right now we can see that cost element have been changed. Now it is referring to secondary cost element. So that is one change that we're expecting based on the definition of cost rollup policy. And now if we go back to logistics variable cost, then there also we can see in the going back to the cost entries that all the cost which earlier used to come from the cost element, now that cost element would be changed to secondary cost element. So right now you see the cost is coming from secondary cost element CC012. The distribution is same, 60% and 40%, but now we are also rolling up the cost to the secondary cost element, and it will be very clear when we'll talk about in the cost control workspace how it allows us to track the flow of cost between different cost centers. We can also trace the rule. So now if we'll trace the rule for cost center 12, it clearly says that okay, it is using the rollup policy that we have defined. So with overhead calculation being done both with rollup policy defined and without rollup policy defined, we can go back now to cost control workspace. In the cost control workspace, while we are configuring it, in one version we'll configure with rollup policy, and in other version we'll configure without rollup policy. And how we can do that? We'll have to just reference the right allocation, right overhead calculation into the cost control workspace. With that, let's quickly move on to the configuration of cost control workspace. And this is the cost control workspace that we have configured. In this, the cost control unit is coming from USCA overhead calculation ledger. We are referencing CDS-PL dimension hierarchy. In this dimension hierarchy, we have also added secondary cost element. And we are using organization as the cost object dimension hierarchy. After that, for the period columns, we have enabled by default current period and the year to date. And for the columns to display for cost, we have enabled fixed cost, variable cost, fixed and variable cost, and total cost. Now talking about the final setup, which is about assigning calculation record. So for one period, we can assign only one calculation record, and calculation record refers to overhead calculation. So while we cover the demo for the period 3, first we'll go and assign the overhead calculation where rollup policy have been disabled, and then we'll come back again to work to this configuration and change the overhead calculation with rollup policy enabled, and we'll see how those two different configuration gives us information about the cost flow between cost object in the cost control workspace. With that, let's quickly look into the demo of cost control workspace with the changes rollup enabled and rollup disabled. First, we'll go back to the cost control workspace configuration. In the cost control workspace configuration, select the right statement, and this one will only change the calculation record. Here we are going and selecting the overhead calculation where we have not considered the rollup policy. We have considered distribution, we have considered behavior, we have distribution allocation, but not rollup. Now, if we'll go back to fiscal period in the cost control workspace, we'll change the fiscal period to period 3. We'll select the right statement, which is USCA overhead cost control. And once we do that, in the cost object dimension hierarchy, we'll select the organization node, which is having the cost for complete organization. So right now, if we review the detail, you see we have variable cost of 40,000, and from shipping, freight, and packaging, we also have a fixed cost of 10,000, and that is coming from the behavior policy that we have defined. In addition to that, all the columns that we have enabled, we can validate that fixed, variable, and whatever we have defined as part of our cost control workspace configuration, that is coming. And all the cost entries that has been made to the cost accounting ledger, that is also getting reflected here. Now we can go back and modify the filter of dimension hierarchy to the cost center 10. In the cost center 10, which is the cost center for sales, if we'll do that, we would be able to see the fixed cost is coming for the other expenses is 2,500, which is coming from the equal distribution of cost, and the variable cost is coming out to be 8,533, which is coming from distribution and allocation both. But at this point, we cannot say what is coming from allocation and what is coming from distribution, and for that we'll need roll-up policy, and we'll talk about this when we enable the roll-up policy. Now let's quickly go back and also modify the cost center here to logistics, which is 12. In case of logistics, we'll see that fixed cost is 2,500 from the equal distribution, but variable cost is coming out to be 0, which is correct. But now we don't know that if there was a variable cost and if that has been allocated. So that information we don't have. But if you remember the scenario, we have allocated all the variable costs from logistics, right? So that definition we cannot figure out just by looking at overhead calculation record linked with cost control workspace, where we don't have roll-up policy defined. Now, with that being done, we can quickly go back to the cost control workspace, and in the cost control workspace, we'll change the overhead calculation record and assign the right overhead calculation record. So if we go back to statement, assign calculation record, and from the drop down, we'll select the overhead calculation which considers the roll-up policy. Now, with this change being done, we can go back to the cost control workspace again. In the cost control workspace, first thing we'll again do, we'll select the right period where we are doing analysis. And we'll go back to the statement. Now, if we'll change to organization, in the case of organization, we would find no change, and which is logical. Any cost transfer and allocation happening between cost center should not change organization level cost structure. So what we are seeing is fixed and variable, and all the entry is exactly same as without roll up. But if we move on and change the filter to cost center 12, which is the logistics cost center, then we can see some differences from the earlier one. Let's quickly go back and change that to logistics, which is 12. Let's select that. And if you see here, in this case, the fixed cost has no change, but in case of variable cost, total value is still 0. But now we can see it actually earlier had 8,000 freight and shipping, but that has been allocated as part of secondary cost allocation. That is why minus 8,000 is there, and that secondary cost allocation is happening from CC 012, right? So this gives more detail that how the cost is allocated between cost centers. Now, if we go back to sales, which is 10, in case of sales, earlier it was only giving us 8,533, but here now we can see 5,333 is coming from shipment and 3,200 is coming from allocation, and that allocation has happened from cost center 12. Similarly, if we'll go back to cost center 9, then we'll see there's no fixed cost because there was no fixed cost allocated here, but there is one allocated variable cost, and that allocated variable cost is coming from cost center 12, which is referenced by secondary cost element CC12, and that is what we can achieve using cost roll-up policy combined with allocation policy. If the cost roll-up policy is not defined, then we cannot in the cost control workspace trace how the cost is flowing from one cost center to the other cost center, and that is what we wanted to cover as part of demo. So we have defined all the policy. In this policy, we have also referenced the right dimensions hierarchy and right allocation basis. And we started with freight. We first distributed freight to cost behaviors, and then those cost behaviors, which is fixed and variable, we eventually again distributed them based on allocation base. And for logistics, we have done cost allocation, and the result of cost allocation we saw with respect to rollup policy and without rollup policy. So that is what we wanted to cover. Now moving on and talking about few resources and recommendations that we wanted to share. So one of the things that we have covered as part of this session is dimension hierarchies play a very important role while defining cost accounting policy, right? So this could be one of the very important decisions that you will have to make, that what are the appropriate dimension hierarchy that would be needed for your implementation. So with that being finalized, you can think about defining right sort of cost accounting policy. And then you can also experiment with policy. If you'll go in the demo data, we have covered one scenario, but there are many other scenarios and many other policies which has already been defined. You can start creating some sample data and start validating how those policies are impacting different overhead calculation and distribution that we can achieve through policy. So that could be one thing that can be done looking at the demo data. That all we already have. Demo data is mostly defined from legal entity USP2, right? So if you want to explore that, you will have to post some data in USP2 and you can start exploring something about policies. We have not covered Get Started Wizard, but that we have highlighted here because Get Started Wizard provides a very good approach to define the cost accounting ledger. It provides a wizard-based approach where you can have multiple steps, and using that you can quickly create a basic cost accounting ledger and related configuration, and then you can detail that out based on the requirement that you have. So that could be the starting point, and with that starting point, you can start configuring more and more of the information. And finally, we also have one additional workspace, which is known as Cost Accounting Ledger Admin Workspace. This workspace provides information with the context of a cost accounting ledger. In this workspace, if you go, it will talk about against a ledger, what are the policies we have defined when we have done data import. It will also talk about what are the cost control unit that we have defined, right? So this could be one-stop checkpoint to validate all the details about a ledger, how complete the ledger is, if there's something missing, if you have not imported data for a particular period, right? So anything of that nature, if you're interested in, you should definitely explore Cost Accounting Ledger Administration Workspace. So these are a few things that we wanted to share. In addition to that, we have also captured few resources, obviously starting with Get Started Wizard. And then we also have Power BI content, and for that we have referenced the link here. And in the documentation, we have one more example of overhead calculation. So you can maybe start looking into that and see how overhead calculation can be achieved with a totally different scenario. And finally, we are also talking about if you are trying to bring data from finance and operation for allocation basis, then you can use provider templates, and that would facilitate data import from finance and operation. Only thing is that whenever you are importing data from finance and operation, the data must be linked with one financial dimension, because that is what becomes cost object in cost accounting module. And finally, we have highlighted some data entity that is something that can be used to bring in information into cost accounting. So that's it from our side, and if you have any questions, we can take that up.
Thank you, Amar. Yeah, we have a couple of questions there. The first one is, are there additional considerations for intercompany allocations of cost distributions?
In case of intercompany, I think we don't have additional consideration, but in case of intercompany, what can be done is we can bring data from different companies. So cost accounting allows us to define data from multiple legal entities. Let's say right now all the analysis that we have done from USCA point of view. But if you also want to bring data from USC and USP2, right, then you can define your cost element and data sources accordingly, and that would allow you to do policy definition and overhead calculation based on data from two different legal entities. So that can be done if that's the question. But intercompany, I'm not sure if there is something else that you wanted to highlight. But yeah, multiple legal entity data definitely can be done.
Thank you. Is it possible to import cost accounting data from a third-party system other than F&O, like banking system, for example?
Other than F&O, yes. So as long as your data meets the structure of cost accounting definition, then yes, it can be brought in. And that's why if we have covered in the last session, we have covered that, okay, we can bring data from finance and operation, we can bring data from outside, and we can also bring data from Dynamics AX. So yes, that answer is yes.
Thank you. Are we able to handle cost allocations to PMA projects based on statistical measures?
So in case of PMA projects also, so cost accounting module, what it does, it creates a replica of all the financial data that has been posted that you need, right? So as long as the PMA generates data, so if you'll talk about project module, also it will in the back end eventually have financial data getting created, right? You will have some journals, some vouchers getting created, right? So as long as you want to analyze that voucher, then yes. But if you are looking for a link between PMA projects and cost accounting, then the answer would be no.
Right, thank you. Another question is if overhead calculation is only based on GL posting.
Yes, GL posting becomes the source, and with that source, you can start doing analysis, right? So you need a base, and that base would be the not GL posting, any voucher. Sorry, so I understand. So it is not only GL posting. GL posting we have used in our scenario, but any financial entry getting created. Let's say you are posting inventory data, you are posting project data, and you are posting, let's say, some other data which generates financial data in the backend. We can use that for overhead calculation.
Okay. Another one is it possible to allocate cost based on production hours coming from the route journals of production orders?
Yes. So that is where we have highlighted the provider template. And for this, we also have demo data in the system. The only thing is that these routes and production orders should be linked with the relevant financial dimension, because if that is not there, then we would not be able to, you would not be able to facilitate that.
Okay. I mean, we are. I think this.
We have 1 more minute, I think. Yeah, so we can take one more question if there is.
There's a question about if it is planned to have some of the old functions in AX 2012 version in the future.
Yeah, and that's a good question because the cost accounting module in EX 2012, the complete code base has been not used while we have defined cost accounting in Dynamics 365. So whatever functionality that was part of EX 2012, nothing has been migrated to Dynamics 365. So it is a completely new module. And for now, I don't think we have any roadmap. But yeah, if there's some feature which is very important for multiple customers, then it can be registered in IDEA, and that we can bring back to our product group to see if they want to consider that. But yeah, so the answer for EX 2012 features, it is not there because this module is a fresh approach into cost accounting.
Right. Thank you, Amar. Yeah, I think that's all, and we're at time. Thank you for your questions. You can contact us. You have our contact information if you have more questions, feedback. If you are also interested in certain topics that you would like to cover in the cost accounting module, please send us that feedback. We will be very happy to have that and create more tech talks for spreading more the knowledge. So thank you for your attention, and I will hand it over to Tim to wrap us up.
Thank you, Alejandra. I've posted a link to a short survey in the Q&A panel. We'd love to hear your feedback on today's session, and as Alejandra mentioned, hear what you'd like to see in future events. Thank you for your participation. As a reminder, the recording of today's session will be made available on the Tech Talks Community Dynamics page within the coming weeks. I'd like to extend a big thank you to our presenters, Alejandra Cabrales and Amar Kumar, and to you, our audience, for joining us today. We hope you have a great rest of the day ahead.